points. I want to get to Courtney right now, who has Walmart's results, which everybody is watching. Good morning.
Yeah. Hi. Good morning to you, Andrew. Here we go. So for Walmart's second quarter, we've got adjusted earnings coming in at $1.27. Wall Street had been looking here for $1.22, so that's stronger than expected. On revenues of $130.377 billion. That's better than consensus.
Oh,
so pretty good for a quarter.
Fourth quarter.
Yeah. Pretty wild, right? Those numbers, $130 billion. So the world's largest retailer also raising its full year earnings guidance, as well as its guidance for revenues and U.S. comp sales. Walmart U.S. comparable sales actually coming in 2.8%. That's about 0.4% above what analysts had been expecting. And that marks the 20th straight quarter of growth for that metric. Comp strength there, again, driven by grocery, both in-store and online here. Now, Walmart's U.S. online net sales, those grew 37%. That matches last quarter's growth rate. They're looking for about 35% for the year. And I spoke with Walmart CFO Brett Biggs, who said Walmart U.S. had a great quarter from a business standpoint, though it's been a heartbreaking couple weeks following the tragedies in El Paso and South Haven, Mississippi. Biggs says guidance does reflect, quote, our current understanding of the USTR guideline from Tuesday, and that List 4 does encompass a larger amount of our assortment than other tariffs, but it's still Walmart importing 1/3 of the merchandise sold in the United States in total, and just part of that is from China. So further, Biggs says that Walmart is hopeful for a long-term agreement when it comes to tariff policy, and in the meantime, the retailer has thoughtfully managed through pricing and margins. They're working to find a nice balance between customers and shareholders. And then when it comes to the broader economy, Biggs says, quote, we're watching tariffs. They've been on our mind for the last several months. And as a CFO, you're going to look forward at what could be coming. But we've seen over the years that Walmart does pretty well in different kinds of economic environments.
You know, it's very bold that they are raising their guidance.
It is.
Not even knowing exactly how things are going to go down with the tariffs or anything else that happens. There have been people saying maybe they would have done that a couple of weeks ago, if not for the new tariff news that's out there. But that is a bold call.
It is. And he said, again, that is based on their understanding of the guidelines from Tuesday. And just a reminder, we know how big Walmart is. You pointed out those revenue numbers. If you look at the Walmart U.S. business, again, I think this is just important to remember, they import 1/3 of what they sell, but then only a part of that third comes from China. They haven't defined it further.
10% of all U.S. total sales, I think, is Walmart, and they're the largest employer outside of the federal government.
So it's still humongous, of course. You know, and look, Walmart is looking at this like a number of other companies that sell multi-categories with the pricing and the margins. If there's an item that's particularly price elastic that has a tariff on it, they may not raise the price of that item. They may take it somewhere else.
While you were saying it, I felt a little emotional. I really did. Like a little teary that this great company, when times are really scary and there's a lot of trepidation, and to put up numbers like that, it's like
and then to
the world's not over quite
yet. By the way, we're going to do even better
for the future.
Because nobody's willing to stick their necks out right now.
Given the recent, events out of Walmart, it's just, maybe it wasn't just proud that it's a great U.S. company.
Yeah, I mean,
private sector employer in the country.
Right, and McMillan is doing a great job.